week.
Okay, that is an update on the COVID situation. We'll, of course, keep bringing you, more on this through the day as well. But as we approach the end of 2022, the sugar industry is at the cusp of a mega structural change, and the prospects are looking bright. The government's initiatives on clean energy, cheaper financing, and multi-year tenders from OMCs have led to the industry building capacity to capitalize on the need for ethanol. So what's likely to pan out in the years to come? Surabhi is here to wrap up all of that for us.
Sugar industry is at the cusp of mega transformation. The government's initiatives to tie this sector with the need for clean energy is driving a structural change. Additionally, over the last few years, the government's initiatives have changed the fundamentals of the industry. The OMCs have issued multi-year ethanol tenders, which gives the mills long-term visibility. The government also increased the ethanol price in line with the FRP prices, which also increases the ethanol realization. Additionally, to encourage new capex in the distilleries, government gives loans at lower interest rates. In fact, this year itself, 228 ethanol projects have got loans of more than 18,500 crores. Sugar sector is primed for sustainable and green growth. The ethanol market is pegged to be valued at $16.5 billion by 2030. To meet all the increased demand, the ethanol capacity needs to grow 3 times by 2030. Ethanol production is expected to increase to 1,500 crore litres by 2026. In this year itself, the ethanol capacity has increased to 947 crore litres from 680 crore litres in the previous year. Some of the listed companies are doubling their capacity in the next 2 years with a capex of close to 1,300 crores. Now the question, why ethanol diversion makes sense? Higher demand for ethanol and better realizations have ensured that the excess gain is diverted towards more profitable products. This makes more sense as well as it yields better returns. Increasing proportion of B-heavy ethanol, which is the co-product of sugarcane, have better ROEs as well. The ROE on new ethanol plants with B-heavy molasses is much higher at 146% versus direct route where it's only 47%. Also, the payback period is only 2 years versus 5 years. In the last 5 years, the revenues from distillery segment has grown anywhere between 25 to 60%, and the profitability has seen similar kind of growth. In the next 2 years as well, the revenue is expected to grow at 15% CAGR and the profitability to grow in the range of 25 to 30%. With this, distillery will contribute close to 50% of the profits by FY25 versus 35% currently and just 9% in FY17. Diversion into ethanol segment also helps companies deleverage their balance sheet. In the last couple of years, the combined net debt of the sugar companies have increased by just 100 crores despite a capex of 1340 crores. Higher profitability also had a positive impact on the company's cash flow. The net debt to EBITDA is likely to see a significant improvement from its current levels of 1.3 times in the next 2 years. The sugar sector appears to be powering forward with sustainable growth, which would eventually re-rate the sector.
All right, thanks a lot, Surabhi, for that. Let's slip into a quick break for now. Reliance Industries Chairman Mukesh Ambani completed 20 years at the helm of the company. Excerpts from his address to employees follows after a short break.